Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great weekend. This is 50 pips, rocking and rolling, 14th of June, 2015. Not making any trade calls or recommendations, as you and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means you already understand, you accept all the disclosures, disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? So heads ups for what is likely going to be a pretty choppy week, possibly a lot of volatility, a lot of interesting things to come. So again, caution, 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 helmets on is the name of the game for this week. Now, with the latest bout of news out of Greece, halt of negotiations, having to push things back to the next Eurogroup meeting on Thursday, which is the 18th, I believe, one would have to expect to see some kind of a gap down or some kind of a heavy open on the euro and euro related pairs. We'll have to see what happens. Now, keep in mind that apart from the continuing wheeling and dealing in Greece and all the possible tape bombs we'll get, there's a lot of stuff coming out this week, okay? So basically, it all starts on Monday, where apart from some kind of a overnight light CAD data, we have basically ECB Draghi speaking, right? So that's going to be a pretty important speech, potentially pretty important, right? So basically, keep in mind that there could be a lot of event risk around that event. So that's definitely something I would have marked up on my agenda. And then, there's some other minor points, but I think the main thing we'll have to deal with on Monday is volatility on the market, digesting all the Greece news over the weekend, and on top of it, any new Greek news, and especially what could come out of that Draghi speech. Then we go into Tuesday. We got monetary policy meetings out of Australia, so RBA. We've got a lot of wheeling and dealing on Aussie, so I think that's another very interesting chart for this week. We have an awful lot of UK data coming out, CPI, PPIs, RPIs, core CPIs, HPIs, etc., all those figures coming out. So that'll clearly be very interesting. We've got the European Court of Justice ruling. We've got the German ZEW, and we do have building permits out of the US, along with that GDT price index out of New Zealand, which usually comes out, something like half an hour after US cash market opens. So heads up for that, because, Kiwi's been trading very, very heavy, and it will be very interesting to see if we get some kind of a healthy bounce. Then, as if the FOMC meeting with press conference isn't enough for end of the day Wednesday, we start on Wednesday. We've also got, some trade balance out of Japan. We got some current account out of New Zealand. We got a bunch of UK data, so MPC, claimage count, etc., etc. So that's another busy day. But clearly, with that FOMC, everybody, apart from that event risk out of Greece, the focus is really on FOMC, on Yellen, what's going on Wednesday. Thursday, just when you thought it was over, you're going to have the SMB monetary policy, and with the SMB press conference. Again, keep in mind, with all this wheeling and dealing with Greece and potential, panic here and there, God knows what's going to happen. You're going to have to keep at least half an eye on CHF to see if CHF starts to catch a bit of safe haven bids. So you're going to have your eyes open for that. We got retail sales out of the UK. We got the LTRO out of Europe. We got all those Eurogroup meetings, right, which we're expecting, main decision, some kind of decision out of Greece. So that could be a very late finish. We got the CPI and unemployment out of the US with the Philly Fed. So not only Wednesday is going to be a long day, Thursday could potentially be an even longer day. And then on Friday, we got the monetary policy statement out of Japan. We got that BOJ press conference. We still got our ECOFIN meetings. We got the core CPI out of Canada. So again, you see, it's probably taken me, 5 minutes just to go through the calendar, right? Which usually takes us about a minute or so. So there's just an awful lot of event risk. So that's something you have to definitely keep in mind. So where does that put us in terms of charts? What to look for? Well, I mean, if we're going back to euro, strictly speaking, we've been chopping around in this kind of range. So right here, the way we're trading, again, we've had some fairly negative news out of Greece over the weekend. So I would not, I would expect euro to try and open and probably start trading back down around this midpoint. So, call it 12. 112s or whatever you want to call it, 112.10s, 112, yeah, 112 to 112.10s, you'd expect it to have some kind of gravitational pull back towards that mid-range, okay? Now keep in mind that if you're looking at the bigger picture, nothing much has changed, right? We're trying to hold this kind of upside rotation on euro, right? And what we said is, even though, apart from the Greece news, all the data seems to be pretty good and it still seems to be holding bid, it's all about Greece and about US rates. So unless something drastic happens out of Greece, something happens out of the US, we would expect, broadly speaking, this is a new chart just because I lost all my old charts, but again, levels are pretty much the same. We'd expect to see some kind of broad wheeling and dealing around this zone on euro, unless we get something substantial that the market is not pricing in, and therefore the market will have to reprice. So you can make an argument for both sides, but bottom line, what we would expect is more choppy action, some kind of an open around this level, or in any case a bit of a heavier open rather than it being bid at the open on this Greece news, and then the market will have to settle and see what happens. But it's just a very, very choppy week for euro. A lot of the bigger players have probably already made their bet in terms of position, but heads up because there's a lot of event risk here. What's going on cable? Well, cable, is holding a fairly decent bid here. I mean, if we go back to a longer term chart, not a lot has changed, right? We discussed the fact that, let's get back on the daily, right? We came back here and we caught a bid here at very nice level, 2 times at this 50 back of this move from lows to highs, key support, right? What was interesting about that support, as we discussed a lot of times, was the confluence with the 100 DMA. Very difficult to get purer action than this, right? Then on the bounce, we said if anything, we could start to see this slowing down a little bit. Why? As we're coming back into this 200. So if anything, you'd have to keep an eye here. But here, it doesn't look like it's slowing down, right? It's holding above. So the only way, you could possibly read this is that we are holding this upside rotation, confluence zone bounce. And as long as we're holding above this 100 DMA, it looks like the bid tone is continuing, and probably, what's the next level to look for? Well, the next level is that previous resistance, which is coming in at those 158.10s, right? So I'd call that pretty much top range here in terms of broader chop, and the 151.80s to the downside. So 158.10s, 151.80s, and that is the broader chop zone, right? Break below, then all bets are off, and we're looking back for very aggressive action back to 46s, 48s, right? Back above, we're looking for price to complete this 50 back move, which would mean a completion back into the 123 extension. So clearly right here, a lot of wheeling and dealing, a lot of news, a lot of event risk this week, but you'd want to look at this 200 DMA from a day close perspective as basically that area being the pivotal level, the bull bear line for the week, right? In what you can call, a bullish rotation in a fairly heavy trend, but that's really the line to watch. Okay. What's going on Kiwi, on Aussie? Well, on Aussie here we had as we said, keep an eye on, everybody's looking to sell this. Keep an eye on what happens after the rate decision. Can it get follow through? Can it attract new sellers at lows? Can it accelerate, right? And, on this aggressive move down, what did it do? Well, what pretty much everybody was expecting it to do, ramp back down and clip stops here, right? Clip stops below this level, took out lows. Now, what it's looking like, it looks like it's having a bit of trouble attracting new sellers at lows, even though there's an awful lot of sellers, people trying to continue to stay very, very heavy here. Now, keep in mind that a bounce would be healthy. Right now, what I'm looking for going into the week is this whole basing area, right? You see you've got this 4-hour reversal here trying to hold a bid. Then we had some stop hunt where we took out some weak longs, and then price still reversing back up. So let's just clear this chart up a little bit here. And you see what's happening is price is trying to base at those lows. Now, what are you looking at is the fact that it feels like price is not attracting new sellers at lows, even though we've had a bit of a shakeout. And this whole area is really struggling to get traction. So going into the week, my focus is that low that got taken out last week, right? And that is basically the 70-20s. So as long as the sellers want to remain in control short term, they need to keep price below those 70-20s. So expect them to come in and keep on selling into that zone. Now, as long as they can keep it below that area, expect this to trade heavy, right? Heavy, heavy, heavy. Now, what would the next level to the downside be? Well, we discussed there are a lot of possible zones there. You know, most likely we're talking about somewhere inside this whole 63, 64, zone. I know a lot of people will be looking at this fib, so basically lows to highs, and saying that we've got this 50 back that's attracting at the 68.60s. This is not a fib we would be particularly interested in because of the double top action on that fib. So I would much rather draw my own support zone rather than rely on the fib and talk about the base of these candles, right? Let me just get rid of these lines. Look at this whole area where the buyers came in to support in the past and say, this is the zone that is attracting on a continued press lower. Now, that's going back to what we said, as long as we hold heavy back below this whole area. Now, were we? Okay, so we weren't on a 4-hour, we were on a 1-hour chart before. Okay, I beg your pardon. Anyway, the action is the same. So basically, as long as we hold below these 70-20s, as long as the shorts keep on pressing this, that's the zone we're looking at, 68s, that support zone down there. Now, if we can get back above, then there's another resistance zone, right? And that's the 171, sorry, the 071. So these are the two sell zones I'm looking for, right? These are the two zones where I'm looking for the sellers to come in. Now, personally, it's not the kind of trade I like, so I'm not particularly going to be interested in selling this into the lows, but I'm not into trying to chase the last part of the move. So right here, my focus is on trying to find some kind of technical bounces, right? But if you're looking at Momo lines into the week, which is the purpose of these weekly sessions, keep in mind, these are the two levels where the shorts can come in, but really below 70-20s, extremely heavy. Back above, you could get a little squeeze back into the 71s. That's the next level to watch. Hold below 71s, pressures back on for 70-20s. Pop above 71s, expect to see a bigger squeeze, potentially right back up into the 72-20s. So the bigger squeeze should come if we come back above the 71s, but these are the two really interesting areas I would be focused on the week. Okay, now what else can we look at? Going back to Aussie, because we do have a lot of Aussie in them. And we're still hovering here, right? We discussed this zone. We discussed the fact that personally not a big fan of trying to sell into brick wall. The only thing is looking for tactical bounces here. So this zone has been a pretty good, pretty nice line for scalpers and intraday players trying to get long into this whole support zone here. So you see how many times we've bounced out of this area. Very nice trading. They consider this the mid-range pretty much. Give or take, but it's this whole area here. Now, as long as we keep on getting sold around the 77.60s, 78s, expect price to come back down into this base support, and that's the key line for the week. Now, look at it almost as those lows on Kiwi. If we start to print below here, you'd probably expect to see a lot of follow through. But if we can trade, and we can trade quickly in the week and close back above these 77.60s, 78s, then I would not be surprised to see a squeeze back into the 080. So I consider this zone similar to that 71, not the first zone, not the first resistance zone on Kiwi. The second one, I consider this as the big potential squeeze for 200 plus pip zone. So that's what I'm watching. Below there, it's clearly going to hold very, very heavy. Above, we could catch some kind of bounce. But again, remember, the focus this week is on Greece and Yellen, and basically, is the USD going to catch a bid or not, and are we going to see, some kind of panic or volatility on the Greek event, and that would imply, wheeling and dealing on the euro, possible flight to safety. So, CHF flows into CHF, some wheeling and dealing on JPY. But those are the things to keep an eye out for this week. Keep in mind, a lot of risk. Stay safe. Don't be silly. No need to be a hero. It's not no specific trade or no specific swing or set of trades should be in a position to change your life for the good or for the bad. In either situation, it means you're trading way too big. Okay? Be realistic with your expectations. Stay safe. Have an awesome one. Thanks for listening. Bye-bye, guys.